now is a sweet spot to pull the trigger on buying that house, because you're going to get this reality that housing is sitting longer and prices are dropping, and you have the ability to refi here in a few months at a lower rate.
Good morning, Mike. Today we are talking about the real estate market. And let's be honest, people are just wanting to know, is this the right time for them to buy that house that they've been eyeing on Zillow for the last 30 days? What do you think? Buyers or sellers market right now?
I mean, it's really going to depend on the local area, but to answer that specific question, I do think right now is a very good time to buy, as long as you're buying the right house. You don't want to be overpaying in any market, whether it's buyers, sellers, but I do feel like we have kind of a sweet spot right now to lock in a house, even though rates are higher. That's going to give a little bit better price, and then rates will be coming down. The Fed made mention that they likely will be cutting, which means rates will be coming down. You can refinance and lock in at that lower rate for the next 30 years. So you get the best of the low price today, you lock in a new rate in a few months.
Other than the rate, when you're thinking about a buyer's market, what are some of the other factors that make it a buyer's market?
So everything's going to come down to supply and demand. Right now in this cycle that we are in, it is very heavily weighted by the interest rates. So supply and demand economics are out of whack right now on two sides. So we have a whole group of buyers that was ready to pull the trigger, and they were seeing 3% interest rates, 4% interest rates. And before they could pull the trigger, rates went to 7%. So all of a sudden they're skittish going, man, I missed the boat. And this emotional feeling is still stuck with the buyer side. Then we have on the other side of that equation, the sellers. So the sellers were thinking, I'm going to sell my house and downsize. I'm going to sell my house, retire, and move somewhere else. All these decisions, all of a sudden rates went from 3, 4 to 7, and now they have a locked in 3.5% interest rate. And if they sell, they're going to get a lower price and have to go buy somewhere at a 7% interest rate. So the amount of supply is off the sidelines because they're saying, I'm not making that decision. I'm just going to stay put until things balance out. So we have sellers who are not putting their house on the market, even though they kind of plan to do it. And then we have buyers who do want to buy a house and move into that first home, that upgraded home. They just can't pull the trigger right now because interest rates are holding back their demand, saying, I don't know that I really want to make that decision today and take on that interest rate. So both sides of the equation are kind of throwing things out of balance. But at the end of the day, it still is dictated by supply and demand.
Yeah, that makes it tough. It's that old saying, right? It's the marry your house, date your rate, right? And so if rates are just not quite favorable to either side, right? Because the description that you just gave is like, depending on the rates, that stops people from buying, but also people are not really listing their house because they're like, nobody's going to list this thing. We can't, I can't sell this thing when rates are at 7. What's pricing look like? How does that play a fact? If someone's trying to sell their house and they want to downgrade, to your example, what are they listing their price for when it's a buyer's market versus what are buyers looking for? Or do they have the upper hand when it's a buyer's market from a price standpoint?
So from a price standpoint, we're seeing now that the market is starting to adjust to reality. In the beginning, we came out of a seller's market. So all realtors and sellers thought list high, higher than you expect. You might get even above that on a multiple offer situation, but worst case scenario, you come down a little on a sale price, it's still more than you wanted. So we're listing high on everything because it's a seller's market and people are, vying to get into that house. We stayed in that mindset, but the market shifted to a buyer mindset. So people are still listing high, expecting this, and then reality set in, and it took a while because at first you think my realtor's terrible. At first you think, what's wrong with my house? And then finally it happens to enough people in that market where they realize, oh, we just had to change to a buyer's market. It's nothing to do with this individual house. So now you're seeing price drops. You're seeing houses stay on the market longer, and you're seeing properties now come available on day one at a fair price because the reality is set in and people are saying, if your house is worth $450, you can't list at $475 to try to make another 20 grand. If your house is worth $450, we're going to list at $449 and we're going to expect hopefully to get in that $440 range, but we may be sitting for a while or dropping. So that's where we're at as far as price right now. But that's also why I think now may be a good time if you're financially capable of covering that debt. You don't want to make a poor financial choice to time to market, but if you are capable of buying that property and you qualify for it, it's a good financial decision. Now is a sweet spot to pull the trigger on buying that house because you're going to get this reality that housing is sitting longer and prices are dropping, and you have the ability to refi here in a few months at a lower rate.
That's a great point. So when we opened the show, I was talking about that couple that's been looking at a certain house on Zillow for the last 30 days. What are some of the factors for them to know, okay, is this the right time? I've been eyeing this house. We've watched the price drop. It just went down $10,000 a few days ago. Husband or wife are looking at each other and they're saying, when's the right time? What other factors other than a price drop should they be looking at?
So the factors really come down to the fact of what is that house actually worth? That's what people miss a lot of the times. They see a price drop and they get excited. And it's like, well, if that house is way overpriced, then that price drop means nothing if it's still overpriced. And then on the flip side, people will wait for a price drop, but sometimes like that house is already fairly priced. That's a good deal. Don't wait for the price drop. Take action because that's a good deal. So the first thing to do is always decide without emotion, what is this house actually worth? And then could we afford it? If we know what it's worth and we know we can afford it, now we can get into actual negotiation and say, now let's try to get the best deal based on the current market conditions. But those first two factors are regardless of the market. We need to know what do we actually afford financially and is this a fair purchase at this price? After that, then we're going to start watching and doing some stuff. So I would talk with the realtor. You can run some DIY, but reality is people don't understand markets and they don't understand housing to know like this is a comparable, this one's not, this one's a different school district, this is a buy level, not technically a 2-story, this was built before, this is newer. They don't know how to put all those dynamics together to come up with a fair price. So that would be more the realtor's job. And that's really why they're making the commission is to give good facts like that. So they would pull a comparable analysis and then you look at those comparable houses and you decide, would I have paid this for this house that sold? Would I have paid this? And if you find that range and think, man, this is pretty fairly priced, then you start to get aggressive and you go after that house.
Yeah, that makes sense. We have physicians that are in our family office that are wanting to buy real estate. They come to you and I, and they're asking questions on like, should it be this property? What do you think of here? Give us some feedback. We've listed some of them already. We're talking about mortgage rates. We're talking about the sales price. How many days has it been on the market? Comparables in the area. What's the inventory in your town, your region? And then we just mentioned price cuts. One thing that I think you and I also talked to them about is construction, right? The supply of homes versus the demand. If all of a sudden there's a lot of new construction in their area, that's the market trying to keep up with the demand. Can you talk a little bit about the construction side as another factor of determining the price of the house that you're looking at?
Yeah, so sometimes you can't get a good comparable to say, is this house worth it or not? An easy way to just get a general range, it's not going to be perfect, but you take a look at new construction in the area of similar size. So if you're looking at a 2,500 square foot house, 2-story, it's built in the 90s, you're trying to make a decision. Let's say it's listed at $450. You see, are they building other new subdivisions in the area? Okay, they are. They plaster the sale price and the marketing price all over those subdivisions. Go stop in at the sales office. What are they selling this brand new 2,500 square foot house for? It's very similar. Granted, it's going to be newer than the older one, but you're looking to see, are they selling this for $400 or are they selling this for $500? Because if I'm looking at the house that's listed at $450 and they're selling brand new ones for $400, it just doesn't make sense to buy an older one for $450. I'm not going to be able to exit that property because the reality is if I need to sell this house down the road and somebody could go buy a brand new one for $400, they're not buying mine for $450. So you don't want to be in that boat. So that gives a general kind of pointing guide to say, am I within reason here? Is this house in the range to make it affordable? And if new houses are selling for less than that house, it doesn't make sense to move forward on that.
That makes sense. Let's go back to my initial scenario of a couple that's been eyeing a house for 30 days on Zillow. We've talked about looking at the markets. We've talked about prices, working with a realtor to understand, okay, what's our area doing and get that feedback from a financing standpoint. You mentioned it earlier, like making sure, is this a good financial decision? What should someone who is eyeing that house, right? They're looking, they're like, ooh, honey, I think this is a really good one. Comparables, this might be the house for us. What's kind of that next step for them to say, I'm ready to take some action?
So, you need to know whether you can financially afford it. So that would be meeting with a mortgage broker. Typically a mortgage broker, there's good and bad ones out there, but as a whole, a mortgage broker is going to be able to get better rates because they have more sources for rates versus just walking into a regular retail bank. You're typically going to pay the highest there. It's not across the board, but in general. So the first thing is to talk with a mortgage broker and see really what you can afford. The one thing that I think people overlook, and a mortgage broker will never say this because they're just trying to get the deal closed, close and make their commission. But you need to look at your job security. Honestly, take a hard look. Nobody wants to believe that they could be laid off or that their position could be cut or hours could be cut. But that is the number one factor, is to look and see, has there been any layoffs? Have hours been cut for anybody? Do I see potential? Is there potential that this gets bought up by private equity and they close this office and all of a sudden I'm out? So that is really the number one factor. People almost always, because the laws are in place that you have to go through underwriting, you can't get this mortgage, they almost always qualify to the T when they buy the house. What doesn't get taken into consideration is that security going forward. So that's a personal decision to know. The other thing that I always say is I would rather have 3 to 6 months of that mortgage expense kind of available in cash somewhere, whether it be a loan in my 401k, whether it be, equity somewhere that I have access to that cash, or whether I just have cash and instead of putting 20% down, I put 10% down to withhold that 10% in cash. And then that's my safety net. So if I say my job is super secure, if I got laid off or something happened, I know that I could get a new one within a short amount of time, but I have this cash access to cover 3 to 6 months of this mortgage payment. So in the worst case scenario, I'm not stressing if something happens. So that's kind of a super safe way to make sure that when you're calling the shots and saying, I'm buying this house, you're prepared for the future. You're not going to find yourself in trouble, even if the market changes a little bit come a year from now.
I am super excited to introduce to you the Doctors and Dollars 5-Day Financial Challenge. I'm Mike Neubauer, I'm CEO of Grand Vision Companies, and I'm the one that you see on the Wealth Wednesday and Daily Dollar episodes with Nate. So Nate and I are partnering again to do something even more exciting, which is the 5-Day Challenge. We're taking the best of all of our episodes, all of our expertise and knowledge, and we're condensing it into an impactful and purposeful 5-day presentation, 1 hour per day, for 5 days, to give you everything you need to build that foundation for your financial future. So if you're looking to gain the pieces, you want those puzzle pieces and find out how they fit in your financial plan, head over to the Doctors and Dollars website, join us on the 5-day challenge. We're putting it together for free, so you got nothing to lose. We look forward to seeing you on the inside.
Yeah, that's really great insight, Mike. Just thinking about, everyone thinks about the front end, right? You kind of front load all of your, hey, I went and got a pre-approval letter. Here's how much I make. Here's how much the house is. I meet all of the underwriting guidelines. Let's close on this thing. Like, this is a no-brainer. A lot of people don't think of the back end, right? Like, I think of people who I knew when I worked at Wells Fargo a century ago, it feels like, but they were originators of mortgages. Well, this was like 2011, 2012, when mortgages were flying off the shelves and all these people were making a ton of money. Well, then like 2016 happens, everything slowed down and a lot of them got laid off, right? But they were so confident. They're like, I'm making great money. This is super easy. It's all commission based. So it's all based on how hard I want to work. Well, it doesn't matter how hard you want to work when all of a sudden they're like, hey, you can't come and sit at your desk tomorrow. So you really have to look at a lot of the factors on the back end to understand, is this something, if I'm going to make this commitment on a 15 or a 30-year mortgage, is this something that I can sustain based on how I'm currently earning a living? So that's really good insight.
Yeah. Well, I mean, I was a mortgage broker. I started like 2009 time, and that was the worst because the market was crashing, so nobody wanted to be a mortgage broker anymore. But the ones who did stay, their life depended on getting those mortgages. So the competition, although there was less people, it was super fierce because people that were mortgage brokers for a career, they had to get paid on that. So I would have somebody come and say, hey, I saw this foreclosure. I want to buy it. How does it work? And then I run through kind of what I just did. You do afford it now, but let's make sure that life is going to afford it in the future. Well, then they go to the guy down the street and he leaves all of that out and he pushes as hard as he can to get that loan closed. And I lose out on the loan. But at the end of the day, it's really not a safe, secure purchase if you're not 100% sure that the security will outlast these next few months.
Absolutely. That totally makes sense. So we've been talking a lot about, because it is a buyer's market right now, we've been given a lot of great insight on things to look out for when it's a buyer's market, again, for that couple that's trying to get that house that they've been looking at on Zillow. But there is such thing as a seller's market. If there is that person that's out there and they find that house, they've been eyeing it, talking with their spouse, trying to figure out like, when do we make that right move? But it's a seller's market. What are some things that people should understand and know going into that type of acquisition?
So are we talking about seller's market or are we talking about sellers in today's market?
Home buyer in a seller's market. What should a home buyer or a potential home buyer look for when it's a seller's market?
So in a seller's market, I mean, prices are going to be going through the roof. Really, that's the thing, is you have to know your financial plan and know, I'm set here, we can afford this, and we're ready to pull the trigger the moment a house comes up. You have to have all your ducks in a row prior. So that's the one thing. The other thing is you can't get sucked into the hype, because following a seller's market is going to be, at worst case scenario, a neutral market, best case scenario, a buyer's market. So you can't get caught up in the hype and overpay, because you may find yourself wanting to sell down the road in a buyer's market. But the number one thing is to be ready, have a game plan, have all the ducks in a row, and ready to pull the trigger. Second best thing is to have access to cash. So when you write an offer, you're not writing a contingent offer dependent on a loan. You're writing a cash offer that you can close in 14 days, and that will have a ton of weight when a seller is looking at these offers. So if you can get in a cash heavy position, you always refinance, come a month later, right into a regular mortgage. But if you have access to that cash to make a strong offer, that's going to be what's going to get you the deal when we're in a seller's market and you're the buyer.
Gotcha. You really want to make your offer that you present more attractive to the seller, right? There's got to be some contingencies. Hey, I've got cash in the bank. We could provide earnest money deposit if we need to. We have flexibility with closing. There's a lot of factors there that even if your offer may be similar to someone else's offer, because again, in a seller's market, you may be at a little bit of a bidding war with, a few other families. But if there's little things that can make yours more attractive, having some of that flexibility and an opportunity, you're saying that's really your upper hand when it is a seller's market as a buyer.
For sure. The number one tip that I give people, because people always want to compete on price, and that's the suggestion of most realtors, which most realtors, they get a commission based off the sales price. So it's only in their best interest to keep raising the sales price either way. So the negotiation tactic on the buy side is typically just offer more. But that's not always what the seller wants. A lot of times the seller wants security. So a lot of times what we'll do is we'll offer a fair price that we know is going to be competitive, but then we'll offer, say, a $20,000 earnest money down with the contract. Because if I have to put down $20,000 plus anyways as a down payment, I'm just putting my down payment up front. But that $20,000 speaks volumes to security and my likelihood to follow through with that transaction. So even if I offer $10,000 less, the seller's already getting more than they ever dreamed about getting for selling this property. So $10,000, it's not going to make a huge difference, but that $20,000 earnest money is me putting that on there and saying, I am 100% going to go through with this transaction. And that sense of security for the seller usually is what gets the deal done in that type of a situation.
Gotcha. Yeah, that totally makes sense. So we've been talking about buyers, right? We kind of opened the show with the buyer scenario, all of the indicators for what a buyer should be looking for in either market, whether it's a seller's market or a buyer's market. I want to go on the flip side now. If someone's wanting to sell their home right now and they want to sell and it's either a buyer's market or a seller's market, there's got to be some different thought process there. Let's start with the buyer's market, which you had said earlier we are currently in. So that person is sitting there thinking, should I put my house on the market even though it's a buyer's market? What would you say to those people?
I mean, it depends how badly you need to move. So some people are stuck in a boat. They don't have a choice. Right now is a very hard time to sell property. I have a lot of single family houses. We're considering selling some of those, rolling the funds over into more of our multifamily projects and just kind of getting those little ones off the books and moving into more of the bigger properties. But we're not doing it right now because it's just a buyer's market and I don't want to be selling in a buyer's market. Luckily, I have the flexibility to hold off and I don't have to do that, but not everybody has that flexibility. So if you don't have that flexibility in whether you're selling or not, you do need to have flexibility in the terms of some sort. So for instance, we have a house that we have to take over through a foreclosure. We gave a loan on the house and then the loan didn't perform. So we had to foreclose, take that house back. The reality is the house didn't do well because it was planned to be sold in a seller's market and now they're in a buyer's market and it was too tight and there's no wiggle room and interest kept eating it up. And that's just the way the market goes. We now have taken it back. So we know that our game plan is to be flexible. If we're going to sell this house, we either need to offer terms like rent to own option for somebody because they don't want to lock in a rate. They want to pay a little bit less. We need to offer owner financing. So for instance, this house, it's worth about $500,000. We could probably sell it for $540,000 if we give owner financing at say 5% because they're getting a huge deal on the rate. Their monthly payment is going down, but we're getting a $40,000 premium in order to give that flexibility. So you got got to really get creative on the flexibility of terms and try to make it a win-win for people. A lot of buyers care about the monthly payment. The reality is in 30 years, you're not going to remember whether you paid $500 or $540 for that house. It just doesn't matter in 30 years. But for the seller, that $40,000 makes a big difference today. So if you can find flexibility for both sides to make it a win-win where the monthly payment is affordable for the buyer, the seller gets a premium, that's going to be the scenario that you have to be in if you want to sell today in the buyer's market. Or you're just going to have to take a discount on the price. I mean, that's the other reality. You just drop the price until somebody says yes. And that's the case for a lot of people is they're not comfortable. They don't know how to do these type of, more complicated, I guess, but advanced strategies. And because they're not comfortable, they just lower the price until somebody says yes. So that's kind of the scenario there. If you don't have to sell your house right now, I would wait. I would either rent it out if I wanted to move, or I would just stay where I'm at. The one thing I would try to do is if I qualified and I could financially do it, I would try to purchase that house that I plan to go when I sell this one and lock in the deals that are potentially there today. So the market is a buyer's market. I would try to be a buyer in the buyer's market without being forced to be a seller. And I would try to make both those transactions happen. Whether I rent out my current house or I rent out the new one before I move to it, I would try to execute that buy side while we have the buyer's market and hold off on selling my house right now.
Absolutely. Yeah, I mean, some people just don't have a choice, right? They got to relocate for their job. They just had twins. Or, to your point, they want to take advantage of the buyer's market. They're like, hey, we're trying to get into this new house. We really need to sell because we want to take advantage of the buyer's market. So those are some really good insights and some analysis on the different options you have as a seller. I could hear like brains exploding from our listeners as you were talking about owner financing, because there's probably people thinking that, hey, we're just stuck. We don't really have any options. But understanding that the person who would be buying your house that you're trying to sell, if you can give them opportunity, whether it's a better rate, whether it's a lower monthly payment, the things that they care about is a much better opportunity for you to get into the next chapter that you're trying to get to, even if the market doesn't align with what you're trying to do.
Yeah, and the reality is things like owner financing, rent to own, there's a lot of flexible options. People just don't know about these because these advanced strategies are going to be best for the individual. The people they are not best for is the realtor's commission, and they're not best for the mortgage broker commissions. So these big industries, they're not pushing these advanced strategies at all because it doesn't benefit them. This is a transaction that really benefits an attorney drawing it up and some flexibility in people. But if you offer a house with owner financing as a for sale by owner, it's going to get attention because it's the only one out there that has that, and that's same thing, even like in the family office, it's so hard to talk about different things of like, what am I going to get of value specifically? And it's like, you just never know. But this is just another example of kind of the stuff we walk through is this is an advanced strategy that most people would never even know is a possibility. It will literally make thousands of dollars. I mean, like I said, on ours, we'll probably clear an extra $40,000 just by understanding the strategy. And it's actually a win-win for both sides. So everybody wins except for the people who collect the commissions in the middle. But I mean, that's the type of stuff that it makes a huge difference. And you have to have those strategies in your toolbox if you want to be able to execute in all markets. Otherwise, you're just stuck hoping that you're a buyer in a buyer's market and hoping that you're a seller in a seller's market, which is very tough because most people are going to be both at the same time. When you're selling a house, you're also looking to buy. So that typically is what people are stuck in, and they can never time then to be a buyer in a buyer's market and a seller in a seller's market. The only way to do that is to have a ton of money or understand these advanced strategies that allow you to be the buyer only in the buyer's market and the sell side only in the seller's market.
Yeah, that totally makes sense. When you're thinking about right now being a buyer's market, and we just talked about if you're trying to sell your home in a buyer's market, you gave some great insight on what those challenges can be, but also some of the opportunities that are there. Eventually, the market does swing, right? So let's say you're wanting to sell your home, you can have some patience, right? You're not trying to get out, and all of a sudden it starts to sway a little bit towards a seller's market. What are some things, though, that as you're trying to sell in a seller's market, what are some things to look out for, and what are some opportunities to make sure you take advantage of when it does sway your way?
Yeah, I mean, the seller's market may be coming. It may be short-lived, but I think there's a lot of pent-up excitement on the sidelines waiting for rates to drop. The rates are realistically going to drop coming up soon, and it doesn't even have to drop a lot. Just that signal that rates are dropping, the mortgage brokers and realtors are going to be blasting that across social media. The news is going to be jumping all over that, and the excitement is going to come barreling into the market again, and it's all of a sudden going to be a short seller's market because all this pent-up excitement enters the market market again. So to be prepared for that, the one thing I would say is I would consider being careful about price drops now, because that $10,000 drop may be unnecessary come September. And if you just walked away from 10,000, that's a big chunk of money, so you had to wait another month or two to make that 10,000. It's probably worth it. So I would pay attention to the buyer side emotions if I'm a seller right now, to see what is the market doing, what are interest rates going to do, and does it make sense to drop this right now? Same thing. Some people need to move as quickly as they can. They have to walk away from 10 grand. If that's not the case, I would wait for the seller's market. Once the seller's market is here, I believe very strongly that the top dollar is what I'm after. Now, if there's red flags that say, okay, this guy's probably not going to actually perform on closing this, then I'm going to be careful no matter what. Doesn't matter the dollar amount. But I gave the scenario of what I do of $20,000 earnest money to provide that security. Most sellers want that security. When I'm selling, everybody that can close is equal security to me. I don't really care. I want the top dollar. So if somebody's going to give me $20,000 extra of real money, not just a down payment, I'm taking that $20,000. That's way more valuable. Now, I'm still going to analyze all the deals and see, is it conventional? Is it FHA? Are they actually pre-approved? Do they need to sell another house? All those variables come into play, but the people who are on even ability to qualify, I don't care if you give me 5,000 earnest money or 20,000 earnest money. I want the most money in my pocket. And in a seller's market, I can push for that. The one thing that you got to be careful with pushing for that is the appraised value. So when the appraiser walks in, if I get somebody to give me 480 for my $450,000 house and the appraiser says this thing's only worth 450, that would be one area that I'd be concerned. So what would potentially make an offer stronger to me, or what I may ask for as the seller to the buyer, is a sort of appraisal contingency that says you have the funds, and if the appraisal comes in low, you will cover those with cash. So if we agree to 480, the appraisal comes at 450, you're still responsible to cover that 30,000 in cash and go forward with this transaction. So that's the number one thing that I'd worry about when I'm pushing for the top dollar.
Yeah, is that a common thing? Because that's, to me, if I was a buyer and it's like, I'm in a bidding war, right? It's a seller's market. This home is in top condition. We feel like the price is fair. The seller's wanting to get out. I offer 480 and then the appraisal comes back at 450. To me, if I'm the buyer, I'd be like, man, I just got a deal. Like, they have to give it to me at 450 now. But you're saying as a seller, you do have that leverage to say, this is what it's worth. I have other offers at 480 and somebody else commit to the 480. Here's that cash difference, for that margin. Is that a common transaction that happens when it's such a fast moving transaction in the seller's market?
You have that leverage when that moment comes, for sure. You don't have to sell the house for 450 because the appraiser said it was worth 450. You can say, no, we want 480. But I would have that conversation before the appraiser ever goes out there. I would say, listen, we have multiple offers. This is what I expect of this offer. We're going to put this in the contract that says, if by chance the appraiser comes in low, then you're still going to cover it. So I'm not waiting for the low appraisal when they now have negotiation term. I'm negotiating that up front and locking them in before we ever get there. Because the reality is, an appraiser is just an opinion of value. So people think the appraisal means this is exactly what this house is worth. It is a more educated opinion of value, but at the end of the day, 3 appraisers going out to that home are going to appraise at 3 different values. So there's no way that they can all be exactly right because it's going to be 3 different numbers. So it's just an opinion of value. And the reason we negotiate this up front is because their opinion of value is $480,000. If you don't think the house is worth 480, why are you offering me 480? Offer me what you think it's worth.
Valid.
And if you think it's worth less, then offer me less, but just realize you may not get the house then because somebody else may think it's worth more. And if the appraiser comes in and says, my opinion of value is less, that's on you. You decided that your opinion of value as the buyer and your realtor was 480. If that's what you think this house is worth, that's what we're closing this thing at.
Yep. No, that's spot on. That makes a ton of sense. And again, there's got to be people out there that are like, boy, that was not on my radar of things to think about, or even an opportunity or an option that I had. So I think that's valuable insight right there.
The tough thing that comes with this is a few things. It has to be a seller's market, so you have to have multiple offers. You don't have the negotiation leverage in a buyer's market because they can walk away and you're stuck without a buyer. So you have to have the leverage of the seller's market. The one key piece that most people don't have is a good realtor that understands these things and then is willing to properly negotiate. So these have to be painted in the right way, right? As a realtor, 2 things. You can't be soft. Well, my sellers would really like to, they think it would be not too soft. But you can't be demanding either, right? You can't plant the flag and say, if this doesn't appraise, you're paying for it, and make them mad. It needs to be in the middle and share that, as we know, markets have been changing. The appraisal could come in anywhere. The comps are all over the board. My seller just wants to ensure that the buyer's actually going to move forward. So we're going to put in this appraisal contingency that just says, if for some reason the appraisal comes in low, you guys will still move forward at the contract price, because that's kind of a concern in the market right now. Obviously, you guys think it's worth 480. Otherwise, you would never have offered 480. But we just realized there's a third party variable here that nobody has control of. We just want to make sure that we iron this out right now before we move forward with any of these inspections and appraisals. So as long as that works for you guys, we're ready to lock this contract up and move forward. That's how you present that conversation. Perfect. Not every realtor can present that conversation like that. And not every realtor has the knowledge and skill set when they get asked a question to respond right away. And that's where you really got to have a good realtor, not necessarily somebody who markets themselves the best, somebody who actually knows what they're doing and can handle these types of negotiations in the right way.
For sure. Final thoughts as you think about where we are today. It's August 1st. The Fed rate announcement yesterday was they're holding steady for now. Like you mentioned earlier, a lot of the know-how people in the world see rates dropping coming up later this year. As rates drop, inflation steadies out a little bit. What are some of the things that people should be looking for? What should they be thinking about, I guess, as your final thoughts on buyer's market versus seller's market? If they are considering selling, if they are considering buying, what's the temperature of the water there?
I think the macroeconomic factors that you have to take into consideration are the rates. Really, outside of that, real estate is very local market driven. So I think the rates are presenting themselves that they will be coming down. You can see the bond market shifting a little, which is outside of what the Fed says the rates are. That's what the market actually says rates should be. So the bond market is softening a little and starting to push lower, which all signals rate drops are likely coming. With that, when the rates drop, I do think there's pent-up demand and the market is going to be bum rush. So I think right now, from a macroeconomic standpoint, is kind of an opportunity where sellers are exhausted from having their house listed. They're exhausted from all these showings back and forth, not getting any offers. They just want this thing gone. I think right now is a good opportunity to make very strong and aggressive offers. Present it correctly and say, I know this is lower than you expected. We really like the house, but the market just doesn't show. Here's the best that we can do, and make aggressive offers in that way and see if you can get a deal before the pent-up demand comes flooding the market. Then just refinance once the rates drop. Worst case scenario, you have today's rates. So if rates go up, you're locked in at today's rates, which is good. If rates go down, you just refinance. It's a win-win on the rate side from a macroeconomic standpoint. From a local standpoint, we just did the Q2 report yesterday for our investors in the Grand Vision Wealth Fund. And that was one thing that really caught my eye is we focus on the Midwest. So when you look at this report, they talk about the real estate market, in this one multifamily, but it's the same across the nation. Everything is talked about in a macroeconomic scale. The news articles that go out, they have to hit the masses. So to hit the masses, you have to talk things on a nationwide scale, macroeconomics. The reality is the local market is much different. So for instance, for our report that we just did, nationwide, there's too many new apartments coming online. That means too much availability. There's not enough demand. Rent growth is slowing. Vacancy is rising. So it looks like a doomsday for multifamily for 2024. But when you dive into the local areas, the Midwest, and specifically where we're at, there has been less new construction. So there's less availability. Rent demand has stayed the same, but there is not additional supply. So in our areas, we're actually seeing steady rent growth and stable vacancy and occupancy rates. So the macroeconomic is drastically different than what our local area is. So outside of rates, the macro doesn't have a lot of effect. On the local market, you got to really look and see, is the demand still there? In my area, there's still pretty solid demand. So the housing hasn't softened quite enough because we have just a booming area. They're doing new builds all the time and everything is always growing. Now, it has softened, just not as much as some of the other areas. The houses that used to sell in a second are definitely sitting longer. So it's definitely more opportunity. It's just not as drastic. So in the local market is when you really got to get keyed in, talk to your realtor, get a comparable report, and start to decide what is this house actually worth. it's probably realistically listed a little bit less than it's worth. I mean, it's probably already almost a deal for the most part just because it's a buyer's market. But now you have the ability to go make a super aggressive offer in a nice way, but a super aggressive offer on these houses to try to lock up, an extra $30,000, $40,000 spread in equity before these rates drop and all these buyers come flooding onto the market trying to buy houses before the rates tick back up.
Awesome. Fantastic analysis from Mike today, my favorite real estate expert. We will be back again with more analysis of the news. Until then, have a good one.
See you, buddy.